What if I told you that one decision made behind closed doors in Baghdad could have a bigger impact on Iraq's future than any all-deal political speech or economic reform announced this year? And what if that decision involved a reported $200 million bribe, not $10 million, not $50 million, $200 million? Now here's the part that most people are completely missing. This isn't just a corruption story. This isn't just another political headline. Some analysts believe this moment may reveal something much bigger about the direction Iraq is moving, the future of its economy, and why international investors are suddenly paying much closer attention. Welcome back to Global Currency Watch. If you enjoy clear analysis without the hype, make sure you subscribe and turn on notifications, because today we're connecting dots that most people aren't even looking at. Let's get started. Over the past several years, Iraq has been trying to transform itself. The country has worked to modernize its banking sector. It has increased digital payments. It has strengthened anti-money laundering measures. It has pushed for economic reforms designed to attract foreign investment. But one problem has always stood in the way: corruption. For decades, corruption has been one of the biggest obstacles preventing Iraq from reaching its full economic potential. International investors know it, financial institutions know it, and Iraqi citizens know it. Every government that comes into power promises to fight corruption, but promises are easy, actions are much harder. That is why recent reports surrounding Iraq's Prime Minister have attracted so much attention, because whether you support him politically or not, the message being sent is powerful. The message is simple: the old way of doing business may no longer be acceptable. And that message matters far beyond politics. It matters to investors, it matters to banks, and it matters to anyone following Iraq's economic future. Let's put this into perspective. Imagine you're a global investor looking at Iraq. You see one of the largest oil reserves in the world. You see enormous natural resources. You see a strategic geographic location connecting Asia, Europe, and the Middle East. On paper, Iraq should be one of the most attractive emerging markets on earth. Yet for years many investors stayed away. Why? Risk, political instability, security concerns, and corruption. These factors increase uncertainty, and uncertainty scares away capital. Money flows where it feels protected. Investors don't just look for opportunity, they look for confidence. And confidence comes from trust. That's why stories involving anti-corruption efforts can become far more important than many people realize. They're not simply political stories, they're economic stories. Now think about this from another angle. Suppose international companies are considering billion-dollar projects inside Iraq. Before they invest, they ask a simple question: can we trust the system? Can contracts be enforced? Can investments be protected? Can the government operate independently from corrupt influence? These questions matter because major investment decisions are not made emotionally. They're made based on risk analysis. Every positive signal reduces risk. Every negative signal increases it. And when a country begins showing evidence that corruption is being challenged rather than tolerated, investors notice very quickly. This is why many analysts are paying attention to what appears to be a broader pattern rather than one isolated story. The focus isn't simply on a reported bribe. The focus is on what the event may represent. Because if leadership is serious about reform, then the implications extend into every area of Iraq's economy: banking, foreign investment, infrastructure projects, international partnerships, and ultimately economic growth. That is where this conversation becomes much bigger than a headline. And in the next part, we're going to examine why some experts believe this story connects directly to Iraq's international reputation, and why global financial institutions may be watching these developments much more closely than most people realize. Because once you understand that connection the entire picture starts to look very different. Why global investors are watching. Now that we've looked at why this story matters beyond politics, let's talk about the connection that many people are missing. Because when most people hear about corruption investigations, bribery allegations, or government reforms, they tend to think of them as local issues. But in today's global economy, they are anything but local. Every major financial institution in the world watches governance. They watch transparency. They watch accountability. And perhaps most importantly, they watch whether governments actually enforce the rules they publicly support. That's because trust is the foundation of modern finance. Without trust, capital stays away. With trust, investment begins to flow. And that brings us directly to Iraq. For years, Iraq has been working to improve its image on the international stage. The country has participated in economic conferences. It has signed investment agreements. It has strengthened cooperation with international financial organizations. And it has repeatedly stated that it wants to become a major economic hub in the region. But there's a challenge. International investors don't invest based on speeches. They invest based on evidence. They want proof. Proof that reforms are real. Proof that institutions are functioning. Proof that the environment is becoming more predictable. This is where stories involving anti-corruption efforts become significant, because they serve as signals, not guarantees, not confirmations, signals. And investors pay very close attention to signals. Imagine you're managing $1 billion investment fund. You have opportunities in dozens of countries. Every country is competing for your money. How do you decide where to invest? You examine risk. You examine stability. You examine leadership. And you look for indicators that suggest the country is moving in the right direction. When leadership demonstrates resistance to corruption, it sends a message. The message is that institutions may be becoming stronger. And stronger institutions generally lead to greater investor confidence. That confidence can influence everything from infrastructure, investment to banking partnerships. Now let's talk about something many viewers ask about regularly. Why does investor confidence matter so much? The answer is simple. Economic growth requires capital. Capital builds factories. Capital funds infrastructure. Capital creates jobs. Capital modernizes industries. Without investment, economic growth slows. With investment, opportunities expand. And when opportunities expand, governments gain additional resources to improve services, strengthen institutions, and continue reforms. It's a cycle. Positive reforms attract investment. Investment creates growth. Growth supports additional reforms. And the cycle continues. This is one reason why international observers pay such close attention to governance issues. Let's look at Iraq's potential for a moment. The country possesses some of the largest proven oil reserves in the world. Its population is young. Its geographic location is strategically important. Its energy sector remains one of the most significant in the region. These are powerful advantages. But advantages alone are not enough. Countries must create an environment where investors feel comfortable deploying capital. That environment is built through consistency. Consistency in policy, consistency in law, consistency in leadership, and consistency in fighting corruption. This is why many analysts believe the real importance of this story isn't the number being discussed, whether the figure is $200 million or any other amount. Isn't the central issue? The central issue is what the response communicates, because responses reveal priorities. They reveal what leadership is willing to tolerate, and they reveal the direction a country may be heading. That's what global markets care about. Direction, not perfection. Investors understand that no country is perfect. What they want to see is progress, and progress is often measured by actions rather than words. Now here's where things become even more interesting. While many people focus only on politics, another transformation has been occurring quietly in the background. Iraq's banking system has been undergoing modernization efforts. Digital payment adoption has increased. Electronic transactions have expanded. Financial inclusion initiatives have been introduced. Banking reforms have continued. These developments don't generate dramatic headlines, but they matter because modern economies require modern financial systems, and strong financial systems support long-term economic growth. Think about it this way. A country can have natural resources. A country can have investment opportunities. A country can have ambitious plans. But without a reliable banking infrastructure, growth becomes much harder to sustain. That's why many reform efforts focus not only on politics, but also on financial modernization. The two are connected. Political stability supports economic growth. Economic growth supports financial modernization, and financial modernization attracts additional investment. Each piece strengthens the others. This is what many observers mean when they talk about structural reform. They're not referring to one event. They're referring to multiple developments moving together. Government reforms, banking reforms, investment reforms, economic reforms, all working toward a common objective, creating a stronger and more competitive economy. And when viewed through that lens, stories like the one we're discussing become much more significant, because they may represent one piece of a much larger transformation. The economic story behind the headlines. So far, we've talked about corruption, investor confidence, and why global markets pay attention to governance. But now we need to discuss something even bigger. The economic reality that sits underneath all of these headlines. Because the truth is, this story isn't just about one decision, one politician, or one moment in time. It's about the future direction of Iraq itself. And when you look at the numbers, it's easy to understand why the world is paying attention. Let's start with Iraq's greatest economic asset, energy. Iraq possesses some of the largest proven oil reserves anywhere on Earth. For decades, oil has been the backbone of the country's economy. It funds government operations. It supports infrastructure projects. It generates foreign currency revenue. And it provides the foundation upon which many future economic plans are built. But here's something important many people overlook. Having resources is not the same as maximizing their value. A country can sit on enormous wealth and still struggle if the systems needed to manage that wealth efficiently are weak. This is why reform matters, because reforms determine how effectively national resources are converted into economic prosperity. Think about some of the world's most successful economies. Natural resources help, but institutions matter even more. Strong legal systems, reliable banking systems, transparent regulations, efficient government operations. These are the factors that attract long-term investment. And long-term investment is what creates sustainable growth. This is exactly why Iraq's reform efforts have attracted so much attention from international organizations. The goal isn't simply producing more oil. The goal is creating an economy that can leverage its resources more effectively. Over the last several years, Iraq has launched multiple initiatives aimed at improving economic efficiency, digital banking expansion, tax modernization, anti-money laundering measures, electronic payment systems, private sector development. Each of these reforms may sound technical, but together they form the foundation of a modern economy. And modern economies attract capital. That matters because capital fuels growth. Now imagine you're an international company considering a major project inside Iraq. Perhaps it's energy. Perhaps it's infrastructure. Perhaps it's telecommunications. Your first question isn't how much oil Iraq has. Your first question is whether the investment environment is improving. Can contracts be enforced? Can business operate efficiently? Is the government committed to reform? Those questions determine whether billions of dollars enter the country or stay on the sidelines. That's why every reform signal matters, because investors aren't watching one event, they're watching trends. One of the biggest trends many analysts point to is Iraq's effort to diversify its economy. For years, dependence on oil created vulnerabilities. When oil prices rose, revenues increased. When oil prices fell, economic pressure intensified. That's not a sustainable model. Modern economies require multiple growth engines: technology, manufacturing, logistics, tourism, agriculture, financial services. The more diversified an economy becomes, the more resilient it becomes. And Iraq has repeatedly stated that diversification is a major priority. This is where foreign investment becomes critically important. Governments cannot build everything alone. Private capital plays a huge role in development. When investors believe reforms are real, money starts moving, projects begin, partnerships expand, infrastructure improves, employment opportunities increase. This is why investor confidence isn't just a financial concept. It's something that affects everyday people. More investment often means more jobs. More jobs often mean higher incomes. Higher incomes can improve living standards. The connection is direct. Now let's talk about international perception, because perception matters in global finance. Whether we like it or not, markets respond to narratives. If the global narrative around Iraq becomes one of reform, modernization, and stability, investor interest tends to rise. If the narrative becomes one of uncertainty and corruption, investor interest tends to decline. That's why stories involving government accountability can have effects far beyond politics. They contribute to how the country is perceived internationally, and perception often influences economic decisions. Another factor worth considering is Iraq's strategic location. The country sits at the crossroads of major trade routes connecting Asia, Europe, and the Middle East. This geographic position creates opportunities: trade, transportation, logistics, energy distribution, regional cooperation. Many countries would love to have that strategic advantage. Iraq already has it. The challenge is creating the economic environment necessary to fully capitalize on it, and that's exactly what many current reforms are designed to accomplish. This brings us back to the story we started with, because when analysts discuss reported rejection of corruption, they're not just discussing ethics, they're discussing economic consequences. Every action that strengthens institutional credibility improves Iraq's ability to attract investment. Every action that improves transparency reduces risk, and lower risk generally encourages greater participation from international investors. That's why this story matters, not because of the headline itself, but because of what it may reveal about the direction of reform. Here's the bigger picture. Iraq possesses tremendous potential. The resources are there. The location is there. The population is there. The opportunities are there. What investors want to know is whether the systems are becoming strong enough to unlock that potential. And many of the developments we've discussed today suggest that progress is continuing, not perfectly, not instantly, but steadily. The bigger picture most people are missing. If you've stayed with me this far, you've probably realized something important. This story was never really about a bribe. It was never just about politics. And it certainly wasn't just another headline designed to grab attention. The real story is about confidence. Confidence in institutions, confidence in leadership, confidence in reform, and ultimately, confidence in Iraq's future. Let's connect the dots. Over the past several years, Iraq has been working on multiple fronts simultaneously: banking modernization, digital payment systems, anti-corruption initiatives, foreign investment programs, infrastructure development, energy expansion, government reform. When viewed separately, these developments may not seem extraordinary, but when viewed together, a pattern begins to emerge. And that pattern is what serious observers are paying attention to, because successful economic transformations rarely happen because of one event. They happen because multiple pieces begin moving in the same direction at the same time. Think about any major economic success story, whether it's a country in Asia, Europe, or the Middle East. The process usually follows a similar path. First comes institutional improvement, then comes investor confidence, then comes capital inflows, then comes growth. The sequence matters. You can't sustainably skip steps, and that's why so many analysts focus on governance and reform, because governance creates the foundation upon which everything else is built. One of the most encouraging signals for many observers is that Iraq's reform discussions are becoming more focused on execution rather than planning. For years, conversations centered around what needed to happen. Today, the conversation increasingly revolves around how reforms are being implemented. That's a meaningful shift. Planning is important. Execution changes outcomes. And execution is what international investors care about most. Let's talk about the international perspective. Global institutions, such as development organizations, financial institutions, and investment groups don't evaluate countries based on emotions. They evaluate them based on measurable indicators: economic growth, financial stability, regulatory improvements, government effectiveness, transparency, rule of law. These metrics influence investment decisions every single day, and improvements in these areas often produce results that extend far beyond financial markets. They can improve employment, increase entrepreneurship, support infrastructure projects, and create opportunities for future generations. Now, does this mean Iraq's challenges have disappeared? Absolutely not. Every serious analyst knows that significant obstacles remain. Political disagreements still exist. Economic pressures still exist. Regional tensions still exist. No country transforms overnight, and anyone promising instant results is oversimplifying a very complex reality. But here's the important distinction. Challenges can exist while progress continues. Those two things are not mutually exclusive. In fact, most successful reforms occur despite obstacles, not in the absence of them. This is where many investors make a mistake. They assume that progress must look perfect. They assume every indicator must be positive. Every report must be encouraging. Every development must move in a straight line. Real-world economic reform doesn't work that way. Progress is rarely linear. There are advances. There are setbacks. There are delays. There are breakthroughs. What matters is the overall direction. And many observers believe Iraq's overall direction remains positive. Let's revisit the reported rejection of corruption. Why did it attract so much attention? Because actions often speak louder than statements. Governments around the world regularly promise reform. Investors hear those promises every day. What gets attention are actions that reinforce those promises. Actions create credibility. Credibility creates confidence. And confidence attracts investment. That's the chain reaction many people overlook. There's another reason this matters. Younger generations in Iraq are increasingly connected to the global economy. They use digital technologies. They participate in modern financial systems. They expect opportunities that align with global standards. This creates additional pressure for modernization. Countries that successfully adapt to these expectations often position themselves for stronger, long-term growth, and Iraq appears to understand that reality. Now think about where Iraq could be 5 or 10 years from now if current reforms continue. Expanded infrastructure, greater foreign investment, improved financial services, more diversified industries, increased regional trade, a stronger private sector. Those possibilities are exactly why international interest remains so high, not because of what Iraq is today, but because of what Iraq could become. And that brings us to the most important lesson in this entire discussion. The smartest investors don't focus exclusively on headlines. They focus on trends. They look beyond individual events. They study patterns. They analyze direction. And they understand that major transformations are often visible long before they become obvious to everyone else. That's the perspective. that separates informed analysis from emotional speculation. The lesson every investor needs to hear. If you've stayed with me all the way to this point, thank you, because what we're about to discuss may be the most important part of this entire video. Not the politics, not the headlines, not the rumors. Not even the reported $200 million bribe story itself. The most important part is understanding what all of this means from an investor's perspective, because at the end of the day, information only becomes valuable when it helps you make better decisions. And that's exactly what we're focused on here at Global Currency Watch. Let's start with a simple truth. Most investors spend too much time trying to predict events and not enough time preparing for them. Think about that for a moment. People obsess over dates, they obsess over rates, they obsess over rumors. But very few spend the same amount of energy building a plan for what happens if the opportunity they're waiting for actually arrives. Preparation beats prediction every single time, and history proves it. The people who succeed financially are usually not the ones who guess the exact date. They're the ones who were ready when the moment arrived. This is especially true when it comes to Iraq. For years, people have been looking for a single event, one announcement, one headline, one moment that changes everything. But real economic transformation rarely works like that. Instead, it happens through a series of developments that build upon each other. Government reforms, banking modernization, foreign investment, infrastructure growth, anti-corruption efforts, institutional stability. All of these pieces contribute to the larger picture. And that's exactly why stories like this matter. Not because of the dollar amount, not because of the drama, but because of what they may signal about the direction Iraq is moving. Let's be realistic. No serious analyst can tell you exactly when major monetary reforms will occur. Nobody outside the highest levels of government and financial institutions has access to that information. Anyone claiming certainty is simply guessing. But what we can do is evaluate trends. And when we evaluate the trends, several things stand out. Iraq continues modernizing its banking sector. Digital payment systems continue expanding. International partnerships continue developing. Economic reforms continue being discussed and implemented. Foreign investment interest remains strong. These are facts, not rumors. Not speculation. Facts. And facts are always more valuable than hype. One thing I've learned after following global currency markets for years is that emotions are expensive, fear is expensive, greed is expensive, impatience is expensive. Let's imagine two different investors. The first investor reacts emotionally to every headline. Every rumor creates excitement. Every delay creates frustration. Every prediction becomes a source of hope or disappointment. Their emotions move up and down constantly. The second investor stays focused on fundamentals. They monitor developments. They study reforms. They understand risks. They understand opportunities. And most importantly, they stay patient. Which investor do you think is more likely to make good decisions? The answer is obvious. Patience isn't weakness. Patience is a strategy. And that's exactly what stories like this should remind us. If Iraq is serious about fighting corruption, that's positive. If Iraq is serious about attracting investment, that's positive. If Iraq is serious about strengthening institutions, that's positive. None of these developments guarantee a specific outcome, but they contribute to an environment where positive outcomes become more possible. That's the distinction smart investors understand. Now let's talk about something many people ignore. Success isn't just about identifying opportunities. It's about being prepared for opportunities. If significant developments occur tomorrow, would you be ready? Do you understand your banking options? Do you understand tax considerations? Do you understand how currency exchanges work? Do you have a plan? Or are you simply hoping everything works out? Hope is not a strategy. Preparation is. And preparation can start today. Another reason I believe this conversation matters is because Iraq is not just another country. This is one of the most resource-rich nations in the world. Massive oil reserves, strategic geographic location, a young population, growing infrastructure, expanding economic partnerships. Those fundamentals matter. Countries with strong fundamentals eventually attract attention, and attention attracts investment. That's how economic growth cycles begin. The reported refusal of a massive bribe, whether viewed politically or economically, sends a message. The message is that integrity still matters, that reform still matters, that credibility still matters. And in global finance, credibility is one of the most valuable assets a nation can possess, because investors don't just invest in numbers, they invest in confidence. Confidence in leadership, confidence in institutions, confidence in the future. As we close this video, I want to leave you with one final thought. The biggest opportunities in history often looked uncertain while they were developing. People didn't fully recognize them until years later. That's because transformation is easier to see in hindsight than in real time. What matters today is staying informed, staying rational, staying patient, and staying prepared. Because regardless of what happens next, those qualities will always serve you well. Thank you for spending your time with me today. If you enjoyed this analysis, make sure you subscribe to Global Currency Watch, turn on notifications, and join us for future updates as we continue following Iraq's economic reforms, global currency developments, and the stories that most people overlook. Until next time, stay informed, stay patient, stay prepared, and remember, the investors who succeed are not always the fastest. They're usually the ones who are ready when opportunity arrives. This is Global Currency Watch, and I'll see you in the next video.